All traders know about chart patterns, but very few know how to find the ones with a real, verifiable trading edge. In this video, eight-figure-a-year prop trader and special advisor at S&P Capital, Lance Breitstein, shares his secrets to finding and trading incredibly profitable chart patterns. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City since 2005, and proud to develop numerous 7 and even 8-figure-per-year traders. Watch, take notes, and learn from Lance so you can grow your trading account.
What is up, traders? So today I want to do a video on a couple setups, and so often you hear me talk about the importance of comparing different setups versus each other and making these analogies. So many good traders that I know really have this just memorized database in their head of all these really good charts. And that's not really magic. They're getting this database from just studying. And so one pattern that I had pointed out at the time when it was occurring is what happened in this ticker DJT, which is the Truth Social kind of Trump stock. And I'll get into the details of this, but this stock reminded me of the setup we ended up then probably about a month later or a couple months later seeing in NVAX. And I challenged traders to compare and contrast these setups to see were both of them worth taking, were either of them worth taking, which was better and why. I got a lot of really great answers on Twitter, and so now I'm going to share with you my thoughts. And I don't think there's necessarily any right answer, right? There's just what is the right answer for you, and I'm going to share what I think is the right answer for me. So first things first, with this DJT chart on the left, so the context of what happened is, of course, this is the kind of Truth Social Trump tracking stock. It is one of those SPACs. And so this huge gap up back in March, towards late March, that was on this ticker change. It used to be DWAC. And what we got here on this day, it was some massive volume capitulation. And keep in mind, this ticker's pretty run up. Like we were starting all the way back at $15. And so over a couple months, this stock really went up about 5x. And this huge volume day, we opened strong, but then we ended up failing really hard. We then start to roll over, and I really love using prior bar highs as a stop. And what happens is we actually hold prior bar highs on this daily chart for quite some time. And so technically for me, given this volume capitulation here, this is technically backside for me, where we've broken prior bar lows, we're holding prior bar highs, and this stock really starts to melt. And then what happens on this big down day? DJT issues a filing essentially saying that the company is losing a ton of money. They may not be able to cover their liabilities in the future. Essentially a kind of wake up, Mr. Market. This company is not making money. We need to cover our asses because the operational side is not good here. And the stock absolutely melted that day. What's so interesting to me, though, is this is a big down move, right? We essentially went from 60 to 45. We were barely able to bounce the next couple days. We definitely held in the bottom half of that move after that fresh news catalyst. And so that $45, that aligns with kind of that moving average. We roll over and we break it on this day. And then we proceeded to melt, holding prior bar highs the whole way down for a long while until about $27. So for me at the time, I had actually done a review video somewhere on this, and I thought this was a very interesting setup to backtest and study. And so then I felt like it was worth pointing out that this NVAX ended up setting up in a pretty similar way. And so now let's analyze this NVAX and some of the pros and cons on its own. So for those that have been trading since 2020, everybody knows Novavax. They were trying to develop a COVID vaccine. Despite like how inflated their stock price was, this ended up not being one of the companies that was able to bring a vaccine to market. And this stock then just subsequently just totally imploded over the coming years. And so what happened in mid-May is essentially this huge gap up and this huge volume here was that they signed a licensing deal with Sanofi. So now all of a sudden, after this company really hasn't had a COVID product for many years, now it's, oh man, like maybe this is back in play. This stock used to be way higher. And that kind of kicks off this rally. So then in early June, we start to break out, and then we get another series of news. I think this Green Day is like the fifth, and essentially like NVAX had been doing well with the FDA process, and they were anticipating vaccine release come September, and I believe there was some new strain that that the COVID vaccine makers believe that their vaccines will be able to cover. So all of a sudden it was an extra wave of oomph. The other thing that I want to point out that I do think is relevant is NVAX was exploding in the 2020, 2021 era in the time of like mega meme stock mania. And what's really interesting is this also coincides with GME and AMC really exploding, like kind of this whole move where things were starting to get a little frothy. And so we then gapped up really big the next day following that green bar. And man, that's a pretty big move for us to go to 15. And then I think pre-market we were at like 26 and we just faded off and then melted. And so then we end up kind of finding a little bit of support here. We have our really, really tight inside bars, and then we break that level. And so this was interesting. It also aligned pretty much with that moving average roughly. So what do I think the pros and cons are of each? So one thing, like if I had to pick one, I actually think the DJT is much better overall. Why do I think that? I think the reason why I'm so into the DJT is really two big things. One, this ticker had mega volume capitulation in late March on that big gap up day. So all that volume turnover, all of these people that bought these couple days are way out of the money. Whereas in NVAX, a lot of the volume and the turnover really happened in mid-May, but at a much lower price. So a lot of the holders, like I tend to think about the psychology of the holders involved. And so you get a huge turnover of shares, but it's down at $8, $9, $10. And yeah, we do a fair amount of volume, but nothing compared to what we did as far as the turnover in mid-May. Whereas with this DJT, we do so much volume turnover up in the 60s and 70s, and all of that volume is way out of the money. The other big thing for DJT is I consider this backside, right? This had a volume capitulation. We failed really hard. We've broken prior bar lows. And so this to me is backside, which I guess Novavax is as well. But then the real killer is this has fresh news on this day with the filing, and we're just not able to bounce from that news whatsoever. So then when we break below that $45, the low of the day, I really think that's such a psychological, oh crap, we're like, what is the floor on this? If this company's losing money, right? It's coming from $15. So what is the floor going to be? Essentially, now you have this negative news catalyst that is crushing the stock, and you're breaking below these lows. Whereas NVAX didn't really have any negative news catalyst. If anything, a lot of this volume is still in the money. We don't have any extra tension and oomph. Like, okay, yes, maybe we went a little too far, too fast in the high to mid 20s. But it doesn't have the same oomph as fresh news. Oh my God, this company is losing money. What's it going to be worth when we can't bounce and break that? That being said, I do kind of think that both of these patterns are worth going for. And the way I would do this is simply as a swing trade where I'd be shorting the break using prior daily bar highs and kind of just trailing that. And so it's interesting. Like I do think DJT was better. It did end up working out better indeed. And not, that part is hindsight. Like I try, I'm a lot of this stuff I'm looking at in real time, but then by the time I produce these videos, it ends up being a lot of time later. And so this NVAX, I wouldn't have thought the reward was so great. But that being said, this stock was also coming from 4, and the initial news put it at around $9, $10. So the meat on this bone is pretty hefty as well. So this did work a little bit. You probably made a point or two, but I could have seen this actually fail quite a bit more as well. That being said, one of the other, I guess, cons of both charts, and particularly for this NVAX, is we have a fair amount of consolidation in here in this like $14, $15 area, which I consider price acceptance. So this is kind of the equilibrium price for NVAX, and even for DJT, you really do have an equilibrium price over the last couple months around 40, 45. So those are another slight con on this, but big picture, we're still up a ton. So you can get some people that are scared and questioning what is the value of this thing. So My personal opinion, DJT was better than NVAX for the reason I mentioned. Probably both were worth going for. Even if I cover up the outcome, I still would have that view. And I think this NVAX probably, even though it didn't perform so well, I really think it probably could have done much better given everything. It's a pretty interesting pattern, and I think this is the type of thing where like you can start to scan and filter for. If you don't know how to filter for different daily chart patterns, there's tons of programs out there. One that I use is stockfetcher.com. I have no affiliation with them. stockfetcher.com. Very robust program to pretty much filter out different daily charts, and you can start to filter for these patterns and study the nuances as far as the news, the volume capitulation, the different types of bounces, and try to make this play your own and see whether there's efficacy by back testing or forward testing it. So thank you so much for watching. Any questions, give me a holler on YouTube or Twitter. Thank you so much.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training.
That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.